All right, folks, bear with me while I offer a preface to this video. Originally, this video was just intended to go to my son, my youngest son. Uh, the reason being is that we had been speaking about investing, and last night in particular, we went over a lot of different things. And this morning I was looking at a stock and I thought, well, I've owned this stock in the past. I bought it. It went up and I sold it. And now I'm thinking, well, should I buy back in? And so I was looking over the financial statement, for the last quarter, a Form 4 that was filed, and trying to decide, what I might do. And I thought, well, this would be a good, stock to, you know, go run by my son and say, hey, look, here's the kind of things that I think about, after decades of trading. So I was going to write him an email, and I'm like, oh shit, this is going to take me it's too long. Okay. So I thought, well, I've got all the stuff here. Why don't I just do a video, and I'll just send him the video and present all these, things, so I don't have to write him out. And then just prior to making the video, I thought, well, I have my YouTube channel, and I did set up, excuse me, I did set up one channel for, doing things like this, not creating photography and puppetry and other things. So this video is for whoever, listens, but particularly directed to my youngest son. Now, to start out, the stock that I'm going to speak about is BGS. Now, BGS, let me see, I can't even remember the name of it. B&G Foods, okay, B&G Foods. I don't know how long they've been, around, but I could pull up a chart here, a monthly chart for, let's say, 25 years, and it shows that they've been publicly trading since about 2007 on my chart. Now, it could be longer, but I'm just saying they've been around a while. And they're a food distributing company. And, I look at their company profile and I look at the security details, and I see that they've got nearly 80 million shares outstanding and a market cap of about 371 million. And I'm thinking, well, this is a company that has traditionally paid a dividend. The current dividend is 76 cents a share. Now, based upon its price that I'm looking at here on my screen live, and the last trade, which was $4.81, that dividend yield is about almost 16%. And I did look at their last Q, and they just did recently pay a dividend. So I'll go over that. My question is this: when I'm looking at it and seeing it skipping along the bottom in this low $4 range, and I look back over 20 years and I see that, the only time it's been lower was, for a brief time after the housing crisis in 2008. And it hit a low of $2.54. So, but mostly hung around about $3.75 for several months during the 2008, 2009. And then when things recovered in April of 2009, after the S&P hit its bottomed out at 666, for those of you that remember, it went up. And then it went up and it had a high in 2016 of $52.84. So it's gone from $52.84. It's taken the jagged stairway down into its descent into hell to its current $4.81. And now the question is, okay, people look at this and people say, oh, well, should I buy it? Now, that's a good question. And there are so many things that go through my mind as a trader and as an investor for decades. And one of them is one of the sayings of the famous trader from the Depression era who made $100 million shorting the market in the crash of the Great Depression. And his name is Jesse Livermore. And one of the things that I remember that he said is never buy a stock that's low just because it was high previously. So that always sticks in my mind. You don't just buy a stock because it was high before and it's low now, because that means nothing. I remember when I was working over at Guarantee Real Estate, and one of my fellow agents was telling me, "Oh, I'm going to buy GM. Look at its low. It's whatever 20-year low." I can't remember what his justification was, but he really didn't have much justification. He just thought the price was cheap, and I told him, I said, that yeah, it looks cheap, but cheap stocks can get cheaper, and there's a reason it's cheap, because if you look at it, uh, in the financials, it looks to me like it's heading for bankruptcy. And what do you know? It it did declare bankruptcy. I had another agent, same thing, except he bought an airline stock, and I can't remember which one it was. And they said, "Oh, it's real low." And I said, you better be real careful, because it's low for a reason, and it looks like they are headed into bankruptcy. And so he sold and saved himself a lot of misery. And he said, I happened to take my uh, taxes into my tax guy, and we were talking, and he brought up the same stock that you told me about, and I told him the same thing. I said, uh, my friend told me that it looks like it's headed for bankruptcy. Well, then he says, when I went to pick up my tax returns, he there was no charge, and I asked him, well, why didn't you charge me anything? And he said, well, because um, what you told me when you handed in your, your financials for me to go over. He goes, I thought about it and I sold that stock, and subsequently it went bankrupt. And his sale of it prior to its announcing bankruptcy saved him a lot of money. It's enough money that he felt like the advice was worth um, not charging my friend for his. The word I'm struggling for here is for his tax return. And I've got a lot of stories in that regards as well. I won't get into, but like friends who just made a lot of money off maybe a stock suggestion, who later were so grateful that they did something, But not that I'm looking for it. I'm just saying this, uh, this stuff happens. So now let's get into like the meat of the issue. You got the stock here. I'm going to bring up a 200-day chart, okay? Daily for 200 days. And the chart the chart shows this gap that it had, where it gapped up, and I think I bought it down there when it was down there, and it gapped up, and I sold, and then it's dropped back down, and you can see it's going around now. It's headed up again, and the chart actually looks a little bit bullish, but aside from all of that, appearances can be deceiving. What I'm going to do is go over the fundamentals and the things that I look at, because it's one thing to look at the stock and say, well, I'm going to make a trade. And if you're just going to make a trade and you look at all the fundamentals that you know about trading, and your objective is to just buy that stock, and I hope it goes up, and if it goes up, I'm going to sell it. I'm going to take my money and run. That's one way of trading. It's not necessarily my style, but my style is more like watch your downside the upside will take care of itself. So I want to know what the dangers are, especially because if you've been doing this for a long time, if you look back at this chart, so look back here to May of 2025, and where the stock was trading at $6.41, and then the next day, what do you know? It gaps and it drops down to $4 and closed at what, $4.73, it looks like, and then the next day it closed at $4.30. But anyway, stocks can gap down, and sometimes once they gap down like that after news or whatever, you're just literally trapped. And these are called, generally speaking, oftentimes referred to by traders as Hail Mary stocks. In other words, it got beat down so bad, the only way you might get out whole is prayers, time, and lots of hope that it might recover, and in so doing, you may come out whole. Anyway, so here's what we're going to look at. We're going to pull up the quarterly report. Now, I'm providing a link down below to the quarterly report on BGS. And I'm just going to kind of go over it really quick to, tell you what I'm looking at. I'm looking at the September 27, 2005, as opposed to December 28, 2024. So it's 9 months, and you look, and it shows the columns, and it shows your current assets, your cash, and whatnot, and it goes down to total stockholder equity at the bottom here, and so there's a lot of numbers in here that are kind of important. I'm going to just go over them briefly. So it's got cash. It's got more $10 million more cash, because, by the way, this is in thousands. So you see up here the share data. There's $10 million more in cash. Total current assets are $816 million as opposed to $781 million. So the current assets have gone up. The current liabilities have gone down slightly, and the reason, excuse me, this is the total assets. Okay, total assets have 2,994. Let's see, 4 is less than 9. Yeah. Okay, so total assets have declined slightly. Then you're going to go down to the total current liabilities and look at them and see that they've gone up in the last 9 months, and so 254 million as opposed to 236 million. So the number for the current assets and total current liabilities are important, because if your current liabilities exceed your current assets, you don't have sufficient working capital. In this case, they have working capital. So, we got that squared away. Then we go down and we look at total stockholder equity. So the total stockholder equity has gone from 524 million, about 525 million to, say, 471 million, just rounding up and down, or up. So there's approximately, 55 million. So in 9 months, there's a substantial drop in the total current stockholder equity. Now, if you go over to the link that I provided and you look under security details, you'll see that the market cap, based upon the last trade of $4.82, is about 372 million. Okay, so in terms of the book value of the company, which that's a whole nother thing that would, could be discussed in another video. But in terms of book value, it's showing that the book value of the company is greater than the total market value or market cap of the company. So now we're going to go down and look at the sales. And we have the sales for 13 weeks or the 3 months basically from, uh, 13 weeks from, that doesn't make sense here. It's saying September 27, 2025 to September 28th, 2024. That's not 13 weeks. That's, oh, okay, the 13 weeks that ended on those days. Okay, so that was their 3 months. All right, I'm sorry for that confusion. But anyway, uh, you've got these two columns, the 39 weeks, meaning the means from the beginning, I think, of the year into September 27, 2025, the first 9 months of the year, let's say, in the first 9 months of the year of 2024. So just comparisons of what they did in sales. And the bottom line is, when you look at them, is that the sales have gone down. They've gone down over 9 months, and they've gone down over the last 3 months. And then you go down and see, well, this is the bottom line. Have they been making money? No. They lost for the 9 months ended in September of this year. They lost 35 cents a share. And the 9 months last year, they lost 37 cents a share. And then in the 3 months, though, of last year that ended in September 28th of 24, they had actually made 9 cents a share. And this year, in the 3 months that ended September 27th of 2025, they lost 24 cents a share. So basically losing money. But the important thing here is, or it's all important, but very important is the cash dividends per share. They paid out last year and this year for the 9 months a total of 57 cents a share. And this last September, they paid their quarterly dividend of 19 cents a share. So they've continued to pay the dividend, but if you look at it, you got to math it. And the math is, we lost 35 cents a share over the last 9 months, but we're going to give our shareholders 57 cents a share. Dividends are the reason a lot of people hang on to stock, even when it's, taking a dump. And you got to ask yourself, though, if it keeps mathing like this, will they be able to pay the dividends? And the answer is clearly no, not unless they raise more cash. They're not going to be able to continue to pay dividends. So is the dividend in question? I would say yes, definitely. And I got a little story about dividends. I remember after the crash of 2008, when GE crashed, the CEO was asked about the dividends of GE, and he said, absolutely, we're going to keep paying the dividends. And so I bought the stock, and it really wasn't my kind of stock, but I bought it. And I can't remember, it was 3 months or 3 weeks later, whatever it was, there was a press release saying, GE is cutting their dividend. They're going to not cut it. I think they eliminated it for at least a time there. And I was pissed, and I sold the stock, and I took a loss and moved on. But anyway, this is always the case with dividend paying stocks. You got to look at what they're doing, like I'm doing. You look at the numbers, and you just say, can the math keep mathing? Okay. And to me, this is not looking good. So, everybody's going to have their own take, but that does not look good to me. Now, the next thing I'm going to move to really quickly is the under the financials on this site that I've given you, the OTC website that I've provided the link for down below, under disclosures, where we found this 10Q that we're looking at. You see a Form 4 that was filed on the 1st of December, so just only, like less than 2 weeks ago. And just prior to that, a 144 form. Now, a 144 is a registration showing that shares are being registered so that they can be sold. And the Form 4 is a form that the SEC requires insiders to uh, provide to disclose that they are either buying or selling shares. So very briefly, in this 144 filing, you see that one of the insiders, a director, um, he filed to sell shares. And if you look at the Form 4 filing, you see that the amount of shares that were sold by the director, Dennis Mullen, uh, corresponded exactly to the 144. So he had registered 18,795 shares, and he disposed of them at $4.50. So he sold the shares. So another thing, and now the stock is higher now because, in fact, it's 485 right now. And like I said, I've been thinking to buy it here. Uh, you got to kind of ask yourself, kind of maybe, what does this guy know that we don't know? That he would sell his shares. He still has almost 84,000 shares left. But if you look at that Form 4 filing, you see that these stock, a lot of these shares were granted, quite some time ago, going back to, let me look just really quick, uh, going back to, I think 2000, let's see here, going back to 2014. So, I don't know how long the restriction was on them, but if you look at the chart, going back on the chart, um, let me just take that daily chart back, 2015, 10 years. So if they were restricted for, um, a couple of years, in 2017, the stock was $42. 2018, it had dropped down, but in 2018, you got, showing about $30 a share. My point is that the stock was a lot higher in the past when he owned it, and he did not register those shares, and he did not sell them. Does he know something? We don't know. I'm not suggesting that he does. Hey, Christmas is coming up, and maybe his wife wants a new Mercedes. I have no idea. He doesn't care about the loss. I am just saying what I see. And what I see is that, okay, so what a director sold. Does he know that maybe the dividend's going to be cut and the stock's going to take a dump? We don't know. I have no way of knowing. You have no way of knowing. It's, in my opinion, just speculation. And for the record, I have, done this for decades, where I look at these things and I see that, oh, they sold the shares. And then you see, oh, the stock really took a dump, okay, afterwards. And then I have seen the case where the insider sold their shares, and after they sold, the stock really took off. So it's hard to tell from the fact that these insiders are selling what exactly is going on. And again, I'm not going to speculate one way or another why this insider sold, and what the direction of the stock is going to be, because I'm just not giving stock advice in terms of buy, hold, sell. I'm giving stock experience from decades. I'm not a registered advisor, and so you just take it for what it's worth. I'm just reporting what I see. And anyway, uh, that's what I see, and this is what makes trading so difficult, because now if you buy this stock, let's say here it's currently 487. If one is to buy the stock here, then you might want to have a plan. If I was going to buy it now, um, at this price, I would want to have a plan, like an exit plan, uh, built in, because generally speaking, if these numbers were good that we went over, if they were more positive, then if I bought a stock like this, I would be watching it. And if I saw that the numbers were improving, like instead of what the trend here has been, they have gotten worse and worse over years, which is why we're looking at a stock going from like 50 or 40 down to 4. But if I looked at it and saw that it was improving, I would add to my position. And if the stock had a pullback and it dropped significantly, and all things being equal, I would probably, add to my position. I wouldn't sweat it because, I'd be looking at the fundamentals, and if I'm right, good, I'm right. By the way, I'm going to digress. There was a little penny stock, and I'm not going to mention the ticker, okay? But I'm just going to tell you um, just a little story before I forget. There's a stock that a while back I saw that the one of the insiders, the primary like CEO of the company, and like I said, this is a penny stock. It was trading at a nickel, but he bought 50,000 shares at a nickel. I think it was 50,000. I'd have to go back and look. It was at least 50,000. And he already owned a lot of shares, and he disclosed it in a Form 4. And so after he bought those shares, and I looked at it and I said, well, this looks, like it could be okay. So I followed him into the trade and I bought shares. And this is a case where the situation was decent. He knew what was going on. Today, that stock is trading at the last trade was 91 cents. So, and it's had a high recently of the recent high on the stock is $1.01. So that's that's 20 times your money there. So I'm mentioning that as a case where insider buys, you're following the insiders, like people following like Warren Buffett, oh, Warren Buffett's bought this stock, I'm going to buy it. And, but in this case, it was a little podunk penny stock. But it's one that I have followed for years, and I kind of know a little bit about it and the mechanics of it and whatnot and what they're doing. So I followed the insider. I followed his trade, and I bought the stock as well. So that's a situation where you buy and, the insider buys and it goes up. And then there's others where it, like I said, it just goes the other way. Because insiders know a little bit more. That's why they have to disclose on a Form 4 what they're doing. Because, within a certain amount of time, they're supposed to say, hey, I bought the stock, I've sold the stock, so that you, the public, while not getting any inside information as far as maybe why they sold. And sometimes, by the way, it will tell, because sometimes, a lot of times, in fact, especially in big companies, you've got situations where the insiders are selling their stocks, but it's like at this time of the year, and it will disclose, it'll say that these shares are being sold to offset the capital gains from stock that was granted to the insider. So the insider has been issued stock over the year for performance or whatever, and the capital gains on that stock is equal to so much money. So the insiders have sold shares at whatever price just to cover and raise cash to pay for the tax liability for that stock. So sometimes you will see the reason why the insider has bought or sold. And, if you look, you'll see that sometimes they make direct or indirect purchases. And, there's explanations that are given. But these are things you got to learn if you're trading. Most people that are in, do investing know all this stuff. This is for people that are more like starting out or wondering, or like I said in the preface, this is for my son specifically. And because I made this channel, I'm putting it out there publicly. It's for what it's worth. Take it or leave it. But if if you appreciate it, or if it helps you, why you can do me a favor on my new channel here. You can hit the like button and maybe even leave a comment or say, hey, leave a question. That would be good. And at best, you hit the subscribe button. These things all help, for people who are doing YouTube. And as you could see by looking, if you look at this channel, this channel just got started. And I didn't even intend to do this, okay? It's just this morning I decided I'm gonna do a video to explain this stuff to my son, but now I'm explaining it publicly, for those that have tuned in. Anyway, I don't want. I'm seeing this. I'm like 30 minutes into this, okay, and I just don't want to go any longer. This is a long video, and I'm going to end it here. And if you've endured it, thanks, and till the next one.